per barrel versus $7.15 per barrel reported by the company in the last quarter. Now, the gross refining margins were lower because of lower inventory gains in the second quarter. Now, the crude throughput that was higher by nearly 5%, while sales volume were down nearly 6% to close to 9.14 million metric tons. Now, lastly, on the balance sheet side, if you see the company's debt, now that was higher by nearly 20% to close to 17,852 crore rupees as of the second quarter of financial year 2019.
Well, for Hindalco, we're not looking at great set of numbers coming in from the company. If you look at the operational performance first, EBITDA number that's seen down by as much as 10.3% for this company to a number of 1,250 odd crore. Look at the margins, they're expected to contract to 11% as compared to 14%, and PAT, however, is expected to be higher by 21%. Well, standalone plus Utkal EBITDA, that's a key parameter that we'll keep an eye out for the Indian business consolidation. That's seen down by as much as 4% to a number of around 1,565 odd crore. What goes behind the making of those numbers is clearly the drag that we are expected to see in the copper division, which is expected to weigh down on the earning performance of the company. Copper division EBITDA has seen down. EBITDA for that performance has seen down by 37% downtick to a number of around 3,284 crore. In terms of aluminium division, we are expecting a growth out there, 12% uptick compared to a number of 12,300 odd crore. But then the profits could have been higher had it not been for the higher cost of production and higher alumina costs that the aluminium segment is witnessing right now. Other parameters, we'll be looking out for aluminium sales volume, which is expected to be flattish year-on-year basis, but then we're expecting a 10% uptick sequentially. Copper aluminium is expected, the volumes are expected to be lower both sequentially as well as on year-on-year basis. Key issues that we like to keep an eye out will be the cost of production that the aluminium business is witnessing right now.
Lastly, the third oil marketing company would be reporting its numbers today, Indian Oil Corporation. Now, if you see the headline numbers, the revenues are expected to be higher by nearly 6% to close to 1,37,000 crore rupees, while the EBITDA is expected to be down by nearly 25%. Margins are expected to contract to 7%, while the net profit of the company is expected to fall nearly 25% to close to 5,120 crore rupees. The gross refining margin, that is a key number for the oil refiner, that is expected to come in at around $6.2 per barrel versus $10.2 per barrel reported by the company in the last quarter. Now, it is expected to be a muted quarter on the back of lower inventory gains and a weaker rupee. Now, if you remove the inventory gains, the performance are expected to be steady both in refining and in the marketing business. Now, inventory gains are expected to be lower because of a relatively lower hike in crude oil prices in the second quarter compared to first quarter. On the marketing side, if you see, steady fuel margins were seen throughout the second quarter. Now, the gross marketing margin earned by Indian Oil Corporation on sale of every liter of petrol, now that averaged around 1.6 rupees per liter versus 1.5 rupees per liter reported by the company in the last quarter, while for diesel it averaged around 2.2 rupees per liter versus 1.9 rupees per liter in the last quarter. On the production side, on the operation side, if you see the crude throughput, that is expected to be higher by nearly 1.5% to 17.92 million metric tons, while the sales are expected to be down by nearly 4% to close to 21 million metric tons for the company. On the petchem business, now that is expected to be better due to higher volumes and margins, while the pipeline business is expected to be steady on the back of resilient margins seen in the second quarter of financial year 2019. Now, key things to watch out for from Indian Oil Corporation earnings would be the company's crude sourcing strategy amid Iran embargo and decline in Venezuela crude production. Along with this, a clarity on the company's strategy, how they're going to absorb the 1 rupee per liter hike that was imposed by the government, while the utilization levels of Paradip refinery and forex and inventory changes would be key things to watch out for from the second quarter earnings of Indian Oil Corporation.
Axis Bank will report its numbers, and the expectations are being built as pretty high post what ICICI did. As far as the NII is concerned, we are seeing a close to a 14% growth, and on the bottom line, we are seeing a 75% growth that will come in on a lower base last time around. Business momentum should continue to stay strong by lending as far as retail and the SME segment is concerned. But overall, because of the management change, the loan growth probably will be slightly muted this time around. The benefit from the NCLT cases probably won't be visible in this quarter. Slippages, that's another important thing. We're expecting close to 3,500 crores of slippages that will come in as the bank recognizes the balance sheet stressed assets. Expect the bank's sub-investment grade pool to generate slippages, and that will impact that. Movement in investment grade portfolio will be the key monitorable for them, and credit cost pretty much will remain elevated for the bank.